If you took $100,000 today and invested it in stocks, and the same $100,000 into real estate, who actually wins? In 10 years? So let's settle it. Most people think the stock market is the best way to build wealth. They look at that clean, simple, 10% average return and say, case closed. But then you hear real estate investors say, forget stocks. Property is the only way to get rich. So now you're stuck. Two sides, two confident opinions. Both sound right, because here's the problem. Most gurus get this completely wrong. Not because they're lying, but because they're leaving things out. Important things. Things that completely change the outcome. Today, we're breaking it down with real numbers. No hype, no bias. Just cold, hard math. Let's start with the easy one, the stock market. Section 1, stock market case. You take your $100,000 and you invest it in a simple index fund, something like S&P 500 tracking. No stock picking, no stress. Just set it and forget it. This is why people love stocks. It's easy. No tenants, no calls, no surprises. So, what actually happens to your money? Historically, the market returns about 10% per year. Not every year. Some years higher, some years lower. But over time, around 10%. And this is where compounding does its magic. After 10 years, your $100,000 becomes about $259,000. You more than doubled your money without doing anything. That sounds like a win. But here's what most people don't think about. What don't you see in that number? Taxes. Unless your money is in a tax-free account. When you sell, you pay 15%, 20%, sometimes more depending on where you live. So your $259,000 isn't really $259,000. But here's the bigger question. What did it cost you to get there? Almost nothing. No time. No stress, no effort. You literally click a button and go back to your life. Your biggest responsibility? Not checking your app every 5 minutes. Now let's compare that to real estate, because this is where things get interesting. Section 2, real estate case. You take that same $100,000, but instead of investing it directly, you use it as a down payment. And here's the key question. What if your $100,000 wasn't the thing growing? What if it was controlling something much bigger? With $100,000, you can buy a $500,000 property. That's 20% down. Now your money isn't working alone. It's amplified. Point 1, appreciation leverage. Let's say that property grows at just 4% per year. Half the stock market. Sounds worse than stocks, right? But here's the twist. You're not earning 4% on $100,000. You're earning 4% on $500,000. That's $20,000 in 1 year. On your original $100,000, that's a 20% return. Already, it's beating stocks. And this is the first hidden lever, leverage. But that's just the beginning, because real estate has something else. Stocks don't. Point 2, cash flow. Now imagine you rent out that property. After expenses, mortgage, repairs, taxes, you're left with about $500 a month. That's $6,000 a year. Extra, now your investment is paying you while it grows. But here's the part most people completely ignore. Where is your biggest gain actually coming from? Point 3, loan paydown. Your tenant is paying your loan. Every month, part of that rent goes toward your mortgage. That means your debt is shrinking, roughly $8,000 a year in equity that you didn't pay for. So now you have appreciation, cash flow, loan paydown, all working together. And when you combine all three, this is where real estate starts to look unbeatable. This is why people say, real estate makes more millionaires. But before you go all in, before you sell your stocks, before you start browsing properties, there's something nobody tells you. And this one thing can completely destroy these numbers. Quick pause. If this breakdown is actually helping you see investing differently, hit the like button. It tells me you want more real, no BS financial content like this. Because in the next part, we're going to expose the hidden costs, the real risks, and the one mistake that makes people lose money in both. So right now, real estate looks like the clear winner. Leverage, cash flow, equity growth. It feels like a cheat code. So why doesn't everyone just do real estate? Because there's a side of this that almost nobody talks about. And if you ignore it, those amazing returns can disappear fast. Let's zoom in. Real estate is not just an investment. It's a business. Your tenant calls you. The water heater broke. That's not optional. That's money. $2,000. Gone. Just like that. And what happens when the property is empty, no rent, but the mortgage? Still there. Now you're paying. Out of pocket. This is the second side of leverage. It amplifies gains, but also losses. And then comes the big one, the cost most people underestimate. Point 4, time and mental energy. Real estate takes time. Messages, repairs, paperwork, tenants, decisions. It's not passive. Even if you hire a manager, you're still managing the manager. Congrats, you didn't buy an investment. You bought a part-time job. So now let's flip it. What's the hidden cost of stocks? Section 5, stock market risk. Because stocks look easy. Until they're not. You open your app. Your $100,000 is now $70,000. No warning. No explanation. Just red numbers. What do? Most people say, I'll hold. But in reality, they panic. This is what's called the behavioral tax. The biggest risk in stocks isn't the market. It's you. Selling too early, buying too late, reacting emotionally. So now we have the full picture. Stocks, passive, simple, time efficient, emotionally challenging. Real estate, active, complex, time consuming, mathematically powerful. So the real question isn't, which makes more money? It's, which one fits you? Because in pure numbers, real estate usually wins. Leverage, multiple income streams, tax advantages. Your $100,000 can realistically grow into $400,000 or more in 10 years. But it comes at a cost. Time, energy, stress, final contrast. Stocks, they're slower, but cleaner. No calls, no repairs, no drama, just patience, discipline, and time. So will you value more? Maximum returns, or maximum peace? Because the best investment strategy isn't the one that looks good on paper. It's the one you can stick with for 10 years. The one that doesn't stress you out. The one that fits your life. The one that keeps you consistent. Because consistency beats intensity. Every time. If you have $10,000 right now, and you're wondering exactly where to start, watch this next video. I break down a simple beginner portfolio. You can copy step by step. No confusion. No guesswork. Click it now. I'll see you there.